Welcome back to the Traders Network. I'm Michael Yorba, your host. Thanks for joining us. We're also streaming to you live on yorbamedia.com. All right, my guest this segment is Nick Santiago, President and CEO of InTheMoneyStocks.com. Nick, thanks for coming back on the show. How you doing?
Oh, very good, Michael. How are you?
Good. All right, you want to start off talking about the currencies today, the FXE?
Yeah, I figured we'd take a look at the FXE since the dollar is plunging lower today after making an attempt to close above that 84 level, just couldn't hold on to it. FXE is making a nice little move, but this is just going to be a short-term counter-trend bounce, in my opinion. We won't really see this thing trade above one. And I think it probably can be sold up there for a major move down to the 116 level.
Okay, all right. I get the feeling that the way things are going in Europe, that this is just going to be a never-ending, ongoing story for at least the next several months.
I agree. I completely concur with you, and it just seems that all we get to see is more, central bank rhetoric. Today, I guess Mario Draghi made the comments, but as chartists, this works well for us because technically everything just hits the level, and as long as we have the right pattern in place, there's money to be made.
Okay. All right. That sounds good. Then, we can just yawn and put on the trade and let it go.
That's it.
I like it. TLT, what do you got there?
Yeah, the TLT was something that, I've been commenting on your show for a long time, and last time I think I was on, I said, the best moves come from failed moves. When the TLT was able to close above the June 6th high, which was around 127.60, was showing real strength to me. You had a nice little pullback really from the 16th of July into the 19th of July, and now it's making a move. TLT looks like it just wants to go higher. Watch for the pattern. And any kind of decent little pullback pattern, this thing's going 135, possibly 140.
Okay, pullback pattern. Let's narrow that in. Do you have any support targets in mind?
Yeah, right now there are a couple levels out there. Depending on how it falls into the 130 level, could be setting up, and then you have a nice little pivot there from the 19th of July around 128. So depending on how it comes into those levels, you just got to see if it's a soft landing in there. Usually it means it's setting up to make another big thrust to the upside.
Do you see this trend that it's obvious that what we're into right now, but do you see this trend going on for any length of time?
Well, I think it goes on till the fall season. And that's where you're going to really see the central bankers really take action. They're going to have no choice. Right now it's like the boy that cried wolf. We can only wonder how long they're going to continue to do this. Eventually, going to have to act on it. I know they don't want to act on it. They're not trying to get the most bang for their buck, causing these baby short squeezes over and over. But if you take a look today, Michael, at the spider volume, and I find this pretty amazing, but you have this kind of news coming out of Europe. We're trading up on 111 million shares. Take a look at the JJC today, which is copper. The dollar is getting crushed, and copper can't even get out of its own way. These are all the signs of the market telling you really what the bigger picture is. And eventually the central banks will have to act on it, and I believe it will be Ben Bernanke making the move.
All right, now, when he makes a move, let's clarify that. What kind of move do you think he's going to make?
He's going to actually do another quantitative easing. I don't know how big it will be, but again, he's going to come in there and he's going to actually, throw money at the market the same way he did back in December 2008 and he did back in 2010 after his meeting over there in Jackson Hole. So pattern off this little bounce we're getting today.
Okay, got that. Now let's go to a market you haven't discussed on the show yet, EWI. Tell the audience what that is.
Yeah, EWI is the iShares Italy fund, so it's going to represent the Italian stock market, most notably the FTSE MIB, which is the Milan market. Right now, this thing has had just a really, really good bounce from yesterday's close. I believe if you look yesterday, this thing closed around the 950 level. Today, the EWI is trading up 6.5%. This is a stone cold short at around $10.95.
Okay.
I'm giving you the level. I'm giving you the price. I'm going short at $10.95.
All right. And what do you think is going to happen to the downside, meaning price targets?
Well, ultimately, I think this is probably going to go to around $7. Ultimately, I mean, you're going to have a little pit stop, obviously, around the recent low of 943, around around 921. But ultimately, I do think this thing could head down to $7.
Okay, so am I getting that? Maybe the next vacation you take could be out to pick out your winery in Italy?
Actually, I was just in Europe last week, so I think it's going to be Spain more so.
Okay, all right. GLD, what do you got? What do you have for us there?
All right, gold had a huge move yesterday on gold futures. GLD is inching up a little bit today, up about $1.17. Watch for a wall of resistance around 158. 158 is a very, very key resistance point. The market, or GLD, I should say, has been really unable to get through there with any conviction. And then I do think that gold is susceptible to further downside in the near term. I just want to point out, though, that I'm not going to be so bearish on gold in the next couple months. I think this is the final leg down, and after that, I'll be looking at entry points for gold.
Okay, now that is a very significant statement, the final leg down. Let's open that up. We've got a couple of minutes. Go ahead.
Sure. Well, as you know, Michael, I don't know, I've been doing your show now for quite a while, and I believe we've pretty much picked off the top in the GLD. I think it was August of last year, September.
Yep.
I have not been bullish on gold, and I said I'm a guy that owns gold bullion. I own silver bullion. I own gold coins, silver coins. I have since 2004. I'll be a buyer of gold again. After the next leg lower, and basically we'll see if we get to double bottom or slightly below that. But I think that due to my time sequence or time cycles that I look at when I view gold, it's run its course now, and now it's the correction should be nearing its going to be ready to make another move up.
Now let me open that up more, because when you say something like that, that means that you've got an idea of where the cycle may end. I mean, plus or minus whatever the factor is, and also a price target. So this support, this area that this consolidation pattern that we've been in for the last several months. Do you see, let's say GLD, which is your what we're talking about here, this 150? You think it's going to hold?
I think we could pierce that. I don't see us going significantly lower. The way I'm looking at the charts now, I'm thinking 150, 145 on the GLD is going to be a pretty good level, depending on how and when we get there. But due to the time factor, and we've been in a real good correction since you can make a case since September 2011, and I think that now it's nearing its end, and this is where
reason to believe and scratch my head about a possible flip-flop on the and the U.S. dollar.
Well, what's going to happen, in my opinion, with Treasuries is that right now we're getting like a little bit of a housing boom going. You can see it in the housing stocks. They've held up extremely well. They've been some of the strongest performers of 2012. And what's going to happen is when rates start to go up, people are going to start to run and try to lock in rates, and that's ultimately, I think, the plan of the Fed. I mean, I'm not smart enough to try to figure all that stuff out, but one thing I do know is charts, and I think that's what's fitting into the cards. So later this year, we'll get a chance to swap out of the TLT and buy the TBT for a little while, and I think that'll also be part of our big rally as people try to run into real estate and lock in those cheap rates.
Got it. All right, Nick, thanks for coming on the show.
Thank you, Michael, for having me. Have a great day.
You too. Everybody, Nick Santiago, President and CEO of InTheMoneyStocks.com. InTheMoneyStocks.com is where you need to go to get into his trading room and check out him. Well, actually, I should say it better. Watch him pull pull the trigger on these trades we've been talking about today. All right, up next after the